Good morning, everyone. It's actually Chris from Solstice ATR as well as Excel. You can find us on the websites, Twitter, Instagram, as well as Discord. You can DM me on Discord or on Twitter, get in contact with us. We use this adaptive algorithm for the side market, up market, down market, as well as included the volatility or range bound or expansions. We use momentum indicators to give us direction, which are signals given accuracy by traders such as myself to get about 86% accuracy in every trade that we take with minimum risk. So we use it to help us out, whether we day trade, swing trade, midterm, or long term. So let's go to the first slide that I have up here. And I want to talk about Bitcoin a little bit using 2016 till 2024. We can see we had 8 years there, showing if we purchased a home, which is including inflation, it was an average home in the US about $290,000. We needed about 665 coins to buy that, to purchase that home. In 2020, you needed 45 coins of Bitcoin to purchase a $330,000 home, while in 2024, 5 coins will get you a $435,000 home. So remember, whether you trade commodities, equities, forex, stocks, options, remember, use the time to grow your wealth. And don't be biased to one side and listen to the news on the short term unless you are a day trader. You don't need the news, you need the chart to give you the story. Last but not least, check us out on the website. Get in contact with us, give us your commentary, and smash the like and share it with your friends. Let's go to the first slide that I have up here. And I used this a while back in my videos, and I showed the February 19 high to the March 23rd low when we had COVID till 2021 high. And we created a box here. You can see I duplicated it up here. We used the prior year high in 2021, 2022 to the low of October. We measured the distance. That's a 61.8 measured extension to the upside. We retested this area, came back down, and I did this zigzag pattern, and we rallied back up. So we're going to use the October low of 2023 to this high, which gave us a little bit more bars. And if I'm going to use this October low from here to this high, it's going to give us different measurements while you're using your RSI to give us, when we were expanding, you can see we created a higher high. When we fell back down, we bounced off the 50, rallied back up, and now we're getting divergence. When we duplicated up here the RSI, you can see the 50 was retested, bounced off it. We created a higher high here, then we fell down. Now the RSI tested the 50 twice, but there's an RSI divergence. The trend on the weekly on this push up, here we have a big candle going up, and the following week we have a candle coming back down. Since the November 5th election, Trump 2.0, and the Federal Reserve Board November 7th announcement on the interest rate, we had a big rally back up, volatility spike up, and we had a reset down. Is this rally over, or is there going to be continuation to the downside to testing the 18 SMA and bouncing off it and continuing, or are we going to break through the 18, get to the 50 before continuing back up on the Nasdaq 100? This is the weekly. I'm going to show you the SP on it. You can see the dates here and the consolidation, the rally. Then I showed the 6 bars from the February 19th till March 23rd coming down. This is a weekly bar which represent 5 days in trading, and vice versa. When we fell down from the January high in 2022 to the October low, we had 40 bars and a minus 27.54% decline in the market. It took us a whole year after October to get to the December to basically break even on that rally. And if I take this distance from here to here, I'm going to show you that dump. It took us more. Oops, sorry. Let's get and measure the distance. I'm going to take the October low to this high to show you where it was. It took us 64 bars to get a 37.28% to go back to break even from the 2022 highs till October low. It took us that long to make that return. So is there a possibility coming back down? Yes. Is there going to be continuation higher? Yes. But there's going to be on the short-term volatility, and we can see that the 18 and the 50, how far we ran from the March till up here. If I draw the distance from the March low to this high, you can see you had 94 bars, 119%. If I do the same thing from the October low here to this high for the year, we had 56 bars, and those 46.63% increase in the market. So we're going to trade what we see, not what we think. And I use the SPX here. Let's take a look at some of the semiconductor industry, and I'm going to go to the daily chart. You can see I have this way back. I've used it probably about a year ago on the platform. So we're going to go to a 1 year daily instead of using the 1 year from the December. I just left the December. You can see the January low to this high. Then we fell back down. We continued higher. Now we're consolidating. You can see that there is weakness in the semiconductor sector, and you can see that the part of the Nasdaq top 10 or the Mega 8 or the Mega 7, which are basically Apple, Amazon, Alphabet, Google, and Google, Facebook, which is Meta, Microsoft, Netflix, and NVDA, and Tesla. Tesla has been doing very well in relationship to the other sectors. We get to pay to the S&P 11 sectors. You know, you got energy, discretionary, financial, utilities, material, consumer products, info technology, which is the XLK, real estate, XLRE, industrial, as well as healthcare and telecommunication. So part of that is XL where we are in relationship to that move up after the Trump election. You can see that there's a gap here. We gapped up. We had three soldiers. This was an island and a push up. We came back to retest these three soldiers. If there's going to be continuation to the sound side, I'm looking at the F3 and the 5 and the 18 SMA. If not, I'll look for the backside of this channel that we broke from and that gap to fill here before I do anything in XLY. Let's take a look at the financial XLF. And the reason why I'm doing this to show you that the momentum and interest rates, banks have to slow down their rates on credit cards, fees, Visas, MasterCards, American Express. They're charging too much. They have to cut down that rate or they're going to get caught and people are going to start panicking for the over leverage themselves. And you can see that big gap here in XLF. Let's take a look at see. This is the growth from Charles Schwab. We can see that move from the January low to this high. We had that reset here in consolidation. We filled this gap here and we continued. I'm not showing all the gap because usually all gaps are fillable. So we can see that there is a gap here. We testing the 18 SMA. We bounced off it, but we still have this gap. Do we come back to the 50 SMA or halfway between the 18 and the 50 simple moving average? Or do we retest F3 in the backside of the 116 in this open cone? Because if I draw an uptrend channel here, this is very important on that short time period. You can see where that channel is, and if I connect these two, that's where the backside is. But if I go to the shorter distance, that's where I am looking to see if it catches this one, bounces off it, of that linear regression, or does it continue lower in the Schwab large cap growth. Remove the drawing. So let's go now. Take a look at now. And this is the Vanguard value. You can see it's in the same situation after this consolidation, the rally gap up and trying to fill the gap. The 18 SMA is right here, the 50s here in F6 if we test the F5 bounce, or do we fill 100% of this gap and continue to the backside of this channel and 116 catches up with us. So pay attention. You can see here that there is a gap in here. You can see it right here. I'm marking it. This gap was filled. You can see it. There's a little piece here in the gap here between here and here. There's one here and there's one more here to fill. So this is the ones to the upside. Let's go now. Measurement. SPY and the QQQ. I'm going to show you how to use the SPY measurements for the week and the monthly, so you are not biased. You're not going to draw a fib from down here all the way up here and say this is my Fibonacci's. No, we're going to use the monthly for the short range. I'm not going to do the annual. I usually use the annual from the prior year for the whole year, and extensions to the upside, extensions to the downside. The prior year Fibonacci's are used from last year, 2023 highs and lows. 2024, I'm going to use the monthly measured move in relationship to the weekly. So we're going to break this down a little bit more in details right here. Let me do the QQQ before and come back to the show you the QQQ. And this is the Nasdaq 100. You can see in the Nasdaq 100, they start after this volatility. We haven't filled 100% of this gap. You can see there's a little bit more to fill. Do we fall through and go to the 50 in the backside of the channel and the 116 SMA to catch your breath before bouncing, or do we continue lower? So the semiconductor is a little bit more weaker and starting to shift money around. And I'm going to show you the IWM. This is the IWM. We were in a symmetrical triangle. We looked up, tried to test this area, and this one, we came back to retest basically this candle up here, the breakout. Do we continue or do we fill this gap, lose the 18 SMA, come back to the 50 in the backside of the breakdown of that linear regression uptrend channel? Because if I adjust this one, if I activate it, if I activate it and I grab this one to here, it didn't let me do it the way I come on. Come on. Okay, we got it now. And you can see that the backside of this auto channel or the triangle is back here. We still have this gap. Does it catch its breath here? Leave the gap alone, or do we fall through? Let's go back now. As we promised everyone, I'll show you this on the daily chart and the monthly intraday. We're going to go intraday. We're going to go 60 days just to let everyone know. We're going to see, you can see 90 and 30. So I'm going to use 90. And instead of using the daily, I'm going to use a 6-hour chart. It's going to show gaps in there. That is fine. Where is my October? I'm not going to look at the September. I'm not going to go from down here to up here and measure the distance. No, I'm going to measure the Fibonacci on the monthly charts for the prior month. So we're going to zoom in here. Where is my high for the month is right here. This is the October. We are in November. So if I got to get a measured move, I'm going to take the Fibonacci from either this high to where the 10-1 is, which is the low here. You can see where the extensions are. If I leave it alone, these are my Fibonacci's. If I edit the property, I'm going to change the color on them. You can set them up the way you want. I'm going to make them an off-white so everyone can see where the levels are. If I zoom down, you can see the retest on the monthly chart. We tested the 161. We looked above. We created a shoulder, a head, and a shoulder, and we fell back down. This is my monthly measured move without using volume profile, monkey bars, and where the time spent. If the time spent is lower in relationship to the point of control, you can know how to use it with compression and expansions, firing to the upside or downside on momentum and looking at gaps. This will help you trade much, much better. And if I look at the high and low for the week, if you see this area to here, I can show you where that gap is. We can create a box here. This is the low. This is the high. And if I edit it and I extend it to the right side couple of days, let's do that. We're going to change the color to a little bit on the grayish side so you can see everyone where that gap is. We tested a piece of it. We bounced off the 116 and popped back up. Let's now take a look at the measurement. The RSI fell back down in the divergence. I want to see the distance that we traveled. This was the Friday. If I take the weekend low to this high, we rallied 5.6, and coming back down on the S&P, we came back all the way to here. We had a 2.85 decrease, and the close was a 2.5% down move for the week in the S&P 500. We're going to do this in the QQ. Let me show you XLK, the tech sector. You can see that the tech sector here, similar situation. If I take the high for the week down to the tech, you can see that we had a 4.3% decline, but if where the close was, it's a 3.5 decrease in the XLK. And if I look at the rally from Trump, the low to this high, we had a 6.9% increase in the market, and volatility picked itself up. So that's on the XLK, and vice versa. This is the Nasdaq 100. If I zoom in from high to low on the Nasdaq 100, you can see where we had a 3.8, the decrease was 4.29. And if I look at the rally from high to low, that's a 6.7% increase in a couple of days. So remember, we're going to trade what we see, not what we think on the charts. And we can take a look at the money ES, and I want to show you that we did the measurements last month on the charts the way they're supposed to be. And what if I zoom in, this was last month's range from the high to the low. You can see it. We measured it in relationship to the weekly high and low that run up on last week's range. You see that Trump 2.0. We fell back down. This is the gap in it. And if I take this measuring tool and I redo it, if I activate it to show you how to do this, all I have to do is just activate it, move it to down here. I use the weekly measured move for knowing my extensions to the upside or downside on the charts, where usually the 80 and 100 are usually areas where we bounce off, and vice versa, where we get resistance and support. And sometimes we get 1.5 standard deviation to the upside, or 1.5 lower, or 200% or 200% higher to the upside and downside. We're going to trade what the charts offer us. This is the gap on the chart, so don't be biased. We're going to trade what we see, not what we think. And that's more importantly in trading. I hope this video was very helpful. If you have questions, once again, check us out at Solstice or at Axel. Get in contact with us. We're here to help you out. Take care. Over and